Why do some franchise investment opportunities produce extraordinary long-term returns while others grow slowly despite having strong brands? And why do sophisticated investors often look beyond the brand itself and focus on the infrastructure behind the business? Those two questions reveal one of the most important ideas in modern franchising, and they explain why the infrastructure behind Empire franchising creates a powerful competitive advantage for investors participating in the platform. I'm Justin Kaiser, CEO of Empire Franchising, and for more than 24 years, I've been building businesses, structuring equity deals, and helping entrepreneurs scale systems that can grow across markets for operators. And over time, I've worked in multiple industries, from finance and real estate to solar energy and franchising. And one of the most important lessons I've learned came from growing my own franchise concept from scratch to more than 100 franchise territories before it was ultimately acquired at the end of 2024. That experience taught me something that many investors eventually discover. The real value in franchising isn't just the brand, it's the infrastructure that allows the brand to scale. Strong franchise brands absolutely matter. In fact, the best franchise opportunities usually begin with founders who have built successful operating businesses. Businesses with proven unit economics, strong customer demand, and repeatable operating systems. Those founders understand their markets, they understand their customers, and they've already demonstrated that their model works. But scaling a franchisor from a successful business into a large national or international franchise system requires something additional: infrastructure. Infrastructure is the architecture that supports growth. It includes the systems for franchise development, the marketing engines that generate interest from potential operators, the legal frameworks required for compliance, the operational playbooks that ensure consistency across locations, and the capital relationships that help accelerate expansion. When that infrastructure is strong, growth becomes much more predictable. When infrastructure is weak, even strong brands can grow slowly because the systems required to support expansion simply aren't there yet. This is where sophisticated investors often think differently than most entrepreneurs. Entrepreneurs tend to evaluate opportunities based on the strength of the brand or the uniqueness of the concept. Investors look at the systems behind the concept. They ask a different question: can this system scale repeatedly? And more importantly, can the infrastructure support multiple opportunities over time? That's where platform thinking enters the picture. A platform approach to franchising focuses on building the infrastructure first, and then using that infrastructure to support multiple franchisors. In other words, instead of building a company around a single brand, you build systems that can help scale many brands. This is a strategy used by some of the most successful investment firms in the world. Private equity firms often build what they call platform companies. The platform contains the infrastructure, the leadership, the operational expertise, and the capital relationships required to grow the businesses efficiently. Once the platform exists, new companies can be added to the ecosystem and scale more rapidly because the systems are already in place. Empire Franchising was designed around this exact philosophy. From the beginning, the goal was to build the infrastructure capable of supporting multiple franchisors over time. That infrastructure includes the strategic frameworks required to convert strong businesses into scalable franchise systems, marketing infrastructure designed to generate interest from prospective franchise operators, franchise development systems that guide entrepreneurs through the discovery process, operational support frameworks designed to maintain brand standards, and investor relationships that provide access to growth capital. When a founder enters the Empire ecosystem, they're not just working with consultants, they're plugging into infrastructure that's designed to support expansion. That allows founders to focus on what they do best: building great brands and delivering strong customer experiences. From an investor perspective, this creates a very different type of opportunity. Instead of participating in the growth of a single franchise brand, investors can participate in the growth of a platform designed to support many brands over time. Each franchisor entering the ecosystem benefits from the infrastructure that's already in place, and at the same time, each new brand strengthens the overall platform. The more brands a platform supports, the stronger the infrastructure becomes. Marketing systems improve. Operational frameworks become more refined. Capital relationships deepen. Market awareness expands. And over time, the platform becomes increasingly efficient at launching and scaling new franchise opportunities. This concept is often described as a flywheel. Early brands benefit from the infrastructure that already exists, and future brands benefit from everything that came before them. For investors, this creates leverage. Infrastructure is built once and used repeatedly. The marginal cost of supporting additional brands decreases, while the potential opportunities within the ecosystem expand. Another important component of infrastructure is capital strategy. Many great businesses struggle to see the value through franchising simply because they lack access to the capital required for marketing, development, and operational expansion. Empire integrates capital strategy into the platform itself and funds the growth of the franchise systems. Investors benefit because their capital supports scalable franchise opportunities, while the founders benefit from having resources available to accelerate expansion. Alignment is one of the most important principles in any successful investment ecosystem. When founders, investors, operators, and platform builders are aligned around long-term growth, the entire system becomes stronger. And over time, the infrastructure itself becomes one of the most valuable assets in the organization. Individual brands will grow, evolve, and expand into new markets, and the platform continues operating. The systems continue supporting new opportunities, and that is where long-term enterprise value is often created. Investors who understand platform models recognize this immediately. Empire Franchising was designed to build that infrastructure intentionally. The goal is not simply to launch franchisors, but to create a platform capable of repeatedly launching and scaling franchisors over time. When infrastructure exists, growth becomes more efficient. Opportunities expand, and the entire ecosystem benefits from the compounding effect of strong systems and aligned incentives. If you're an investor exploring scalable opportunities within the franchising space, understanding the role of infrastructure is critical. The difference between investing in a single brand and participating in a platform designed to support multiple brands can be significant in terms of long-term scalability and enterprise value. If you want to learn more about Empire Franchising, how our platform works, and dig deeper into our insights, make sure to subscribe to this channel so you can follow us along our journey.